Hi, hope you are doing well today and welcome to my first video. Today we are going to talk about what is a PE ratio. Okay, so let's get on with the basics first. So usually you see a PE ratio, you will have a really high PE ratio or really low PE ratio or a negative PE ratio. Okay, so let me explain to you what each one of those means. So a really high PE ratio. So a example of a really high PE ratio will be in the range of 100, 200, or 300 range. So 1 to 300 range or 80 to 300 will be fine as well. Okay, so company with those high PE ratio, it means that the company is still on the growth stage. So it means the company still have a lot more room to grow, and each quarter you will be expecting 20 to 50% growth, quarterly growth. So each quarter means 3 months. Okay, so one quarter means 3 months will be, for example, like January, February, and March. So that means one quarter will be three each quarter. Okay, so the second one will be a really low PE ratio. So if the company have a really low PE ratio, it means the company is like very mature. So for example, we will be Walmart. You have a really low PE ratio. So that means the investors are not expecting like 20 to 30% growth. That's like too crazy. So it will be around 5 to 3 or 10% will be 10% will be too high as well. So it'll be less than 5% growth, quarterly growth, or the stabilized low growth at all. So Walmart will be a very mature company. They are currently holding a PE ratio of 17. Okay, so what does it mean if a company have a negative PE ratio? So if the PE ratio is negative, it means that the current quarter it's not profitable yet. Okay, so or it can also mean that it can also mean that the company haven't made a profit yet. Okay, so if the company have a negative PE ratio, then it can mean that the company is growing, like still in the hyper growth stage, or it's just like a dying company that's not making any money. So those are the two scenarios for the negative PE ratio. So how will you calculate a PE ratio? Okay, so it will be pretty simple. You just take the current market share price per share divided by EPS, earning per share. Okay, so let me give you an example. Okay, so let me turn on my iPad. Oh great, it's not turning on. Okay, let's do it on my head then. So let's do one for Amazon. Okay, so I believe it finally turned on. So something wrong with my iPad. Okay, so let's do Amazon first. Okay, so I believe the current price for Amazon will be $948. Okay, so let's get a calculator. Okay, the market price per share right now is $948. Today is April 29th. Okay, so current market price $948.83. Okay, so that's price per share for Amazon, and then divided by earning per share EPS, divided by 5.31. Okay, so it will equal to 178.68. Okay, so that's what we get. So if the PE ratio is a little bit different from the website I'm using, Yahoo Finance right now, so it'd be a little bit different. It'd be okay because it's probably haven't updated to the most up-to-date PE ratio. So Amazon have a PE ratio of 178. So it's a very high PE ratio. So that 178 get us two things. So that means the PE ratio is positive. It means the company is making profit, and the PE ratio is on the almost in the 200 range. So that means the investors are expecting hyper growth. That means and everybody who invests in the company are expecting 20 or to 15 to 30% growth each quarter. Okay, so that means the investor believe Amazon still have a lot more room to grow. That's why for the high PE ratio. Now let's do one with a really low, not really low, but it's kind of low PE ratio. Okay, which is Walmart. Okay, so let me hold on. Let me get the market price for Walmart. Okay, so I believe Walmart right now have a PE ratio of around 17. Okay, so which is very low. Okay, so PE ratio have another meaning. Okay, so let me explain to you and what's the other meaning for the PE ratio. Okay, other meaning is like for example, Walmart has a PE ratio of 17. That means it take Walmart $17 to make $1. Okay, so usually a mature company have a low PE ratio because they are a lot more mature, and then they don't have to reinvest their profit, so they are making a lot more money and with per dollar value. But for example, like Amazon, they're still in the growth stage company. They are still investing their profit for growth. So that means it will bring down the earning per share, which will be higher PE ratio. Okay, so while my page is up for Walmart, okay, let's see. So the current price for Walmart is $75.18. Okay, so earning per share. Okay, PE. No, not earning per share. Okay, $75.18 will be divided by earning per share EPS. Okay, so we divided by 4.38. So that's the earning per share. So we get 17.16. Okay, so it's a low PE ratio. That means the company is mature and we are not expecting too much growth from this company. Okay, so I hope I explained the PE ratio